Hey folks, Dan Frio here with your market update for July 2nd, 2024. So I missed a few days. I apologize. The debate came. I watched the debate, and then my mother-in-law took a turn for the worse. So I got in the car, my wife and I, and we drove to West Virginia from Chicago and visited her for a couple of days and drove back last night. And since the debate, mortgage rates are up, and away. Why? That's what we're here to talk about. So today, here's the top 6 programs that people use when they're buying their first house. Look at the 30-year fixed up there. It was 7, I think right about 7 when I left. So what in the world's going on? The only culprit I can find is right through here. So I researched this Friday because we had some really good economic news come out on Friday. The PCE, the number one inflation figure that the Federal Reserve watches, it came in good. But the market just plummeted. Well, when I mean plummeted, the mortgage bonds, let me show you. Mortgage bonds actually dropped. So here's where we were, let's say right through here. Here's where we were right going into the debate. Look how the markets were just flat. What you're watching right here is the mortgage-backed security bond. Let me explain what happened. Okay, the debate took place, and then all of a sudden the bond prices on Friday and Monday just plummeted. Okay, here's where we are. Why is it a concern? Well, how this works is when the price of a bond drops, rates go up. Well, here's the odd thing. Let's get to the economic calendar for the day. Well, last week, that's what I want to show you guys. So last Thursday, the really only piece of economic data that came in worthwhile was the PCE. Now, why is it important? Well, that's the number one gauge the Federal Reserve monitors when they're checking inflation. Okay, so let's look through this. The PCE month over month, right through here. Last reading was 0.2. Actually, it was revised to 0.3, and it came in at 0.1. So a third of where we were. So that's inflation. Okay, so that's fantastic news. Then you have the year over year. It was previously 2.8, came in at 2.6. And remember, the Fed wants this at 2. So, but it's going down. All right, so why would the bond market drop? This is great news saying, okay, Fed, the numbers are starting to come really in line to what you're looking for, so you can start cutting rates. Well, let's look at what the economic news for today. Well, the other thing here, hold on one second. I got to go back to yesterday because this news is also showing deterioration in the manufacturing section and prices are coming down. Let me show it to you. Manufacturing PMI went from 51.3 to 51.6. It's stable. We'll put it that way. Manufacturing PMI 48.7 to 48.5. Again, it's stable right here. Now the prices right through here. Last reading was 57, came in at 52. So prices are coming down. Okay, so that's what the Federal Reserve wants, right? And they also want people not working. Okay, so let's get over to the news that we have for today. That number is right through here. It's the JOLT index. How many job openings there are? 8.14 from 7.9. So that means people are trying to hire. There's job openings, but their companies aren't filling them right now because of uncertainty. Okay, so that's basically what's going on right now. So when you go back to this, it's like hopefully the markets are going to settle from where we went from Thursday. But let's get over to the CME. Now, let's figure out from the debate time and the data that we have so far, what's the expectations now that the Federal Reserve might cut rates? A lot of people are triggering the September meeting. So let's go to the CME FedWatch tool, and it is right here. And why do we watch this? Well, because it's telling us what's the probability that the Federal Reserve will change the federal funds rate at the next meeting. Well, right through here, if you go down through here, I'll get my big head out of the way. And you can see the September meeting now has a 63.2% chance of a cut. This was about 58% a week ago. So it's up about 5 ticks from where we were. And so that's what's telling us what's going on with what the Federal Reserve might do at the next meeting. Now, here's another piece. Everybody's saying why, and I agree with you guys. So if you came to me and said rates were going to spike to 8% and didn't know anything else about the market, first thing I'd say is housing's going to get clobbered. Okay, but if you really know what's going on and you've been involved in the cycles and everything else, you understand how the cycles work and you understand really how the refinance mania of 2000, 2001, 2002 really helped the economy and housing in the United States. But long term, it's really hurting it. Why? People aren't selling their homes. There's no inventory. Let's go through here. Now, this was posted just the other day. If you're in Manhattan, I got great news for you. Don't go anywhere just yet. It says housing inventory is growing, but nationally home prices aren't dropping dramatically as the recent S&P Case-Shiller Index clearly showed. Why? Well, the rule of supply and demand comes in and picks the winners of list. Basically, it's saying there's just no supply. right down through here. New listing data is growing year over year, but it will be the second lowest new listing data ever recorded in history. So you have a lot of people coming out saying, oh, inventory is spiked. It's up 50,000%. House prices have to drop. Well, we're at the second lowest in history. Okay, so if you take a number, let's take a low number, 1, and you go to 5, okay, 1 to 5, not that many, but that's 500% increase. So that's what I mean. If you have a really low index and you just, get, even if we go back to, we're not even back to normal, and the market, the number, the data is, people are starting to tell us the data is, way too many homes for sale. It's not, folks. Okay, so that's that piece of it. But if you're living in Manhattan and you got an extra $2 million to spend, you're going to be able to get yourself a bargain. Manhattan is now a buyer's market as prices fall and inventories grow. Manhattan prices, as a result of inventory and apartments for sale, are taking longer to sell. What does that mean? Well, it basically means that home prices are dropping. How much? Well, the average sale in Manhattan fell 3% to just $2 million, according to the Douglas, Ellis, and Miller, whoever that is. And the median price fell 2% to 1.2. So when people say, it's going to be catastrophic, worst in history, remember when the worst in history was we saw in the big recession, house prices went down 30%. That wasn't it. Also, what happened is the stock market, people's assets dropped over 50%. So we see now the stock market right now and other equity markets are doing very, very well, keeping the wealth effect in place. But you imagine if we had this housing market and also the stock market dropped 50%, we'd be in really, really bad shape at this point, but we're not seeing that data right now. So that is my report for today, folks. My name is Dan Frio. I'm a licensed loan officer in all 50 states as well as Puerto Rico. I'd love to help you. What do we do? Well, we actually have you go out to our website. Why do we do this? Well, because there's a few tools up here I want you guys to understand. One, if you're looking to buy your first house, see if there's any free money out there for you. We have grant programs available. These grants, the nice thing about these grants, they're forgivable. You don't have to pay them back. So basically, I won't say it's free money, but it's as close to free money as you can get. So check it out if you're buying your first house. See if there's any grants available to you. We have a really nice one coming to those in Illinois. Should have that by the end of the month. It's going to be $10,000 to help you guys get into a home if you live in Illinois. So that's that part of it. But if you want to get the ball rolling and put in your application, see if you qualify to buy your first house, maybe your second house, maybe your first investment property, just click right through here. But you might say, Dan, can I call you guys? I don't want to go through all this stuff. I'd rather just talk to somebody. Sure, I do the same thing. Scroll down right to the bottom right through here, and there's our 800 number, as well as my email address. So thanks so much for watching, guys. I will be back for the closing bell to let you guys know where the mortgage rates ended for today and why. Take care. See you then. Bye-bye.